Welcome to the latest Carson's Take 5, where we're going to talk about inflation. Sonu, today we're talking this one, inflation. Is it all good?
Yes, it's all good. At least we think it's good.
Is it all good? That's a question, right? I mean, believe me, listeners want to know. We've had this higher inflation. We just had inflation data this week. You've had a chance to look into it. Is inflation all good?
Yes, I think short answer.
There we go.
Maybe
done. We're done.
In 12 seconds.
Later. See you next week.
Yeah. No, look, we got the April Producer Price Index, which is the price of goods and services that businesses buy from other businesses. And then, more importantly, we got the Consumer Price Index, right? Now, that is not the Federal Reserve's preferred inflation metric. That's the Personal Consumption Expenditures Index. But PPI and CPI gives us a good idea of what to expect from PCE. I know there's a lot of acronyms there. But look, CPI came in, as expected, maybe marginally softer, but this is the underlying details is what's important. And the good news is most items are trending in the right direction. Shelter inflation, we've talked about that a lot. That's easing, that's lagged, that's catching up ever so slowly with private market data, but it is catching up. It is going in the right direction. Then we're seeing commodities outside food and energy. That's easing too. Right? Household furnishings and supplies, especially used cars, new vehicle sales, prices, things like that. That's easing. That's good news right there. And then food prices are coming down. I know energy prices have been going up from January through April. But the good news is since then, we've seen energy prices pull back. Gasoline prices have come down. There should be more of that as we get into the May and June summer driving season as well. Again, good news for everyone who plans to drive in the summer. Food prices are going down. That's easing. That's a big deal, right? Because a lot of us spend a lot on food. One metric, I'll end with this. I mean, we could spend an hour, but I'll wrap it up with this. Food away from home, especially in full service restaurants, that's running about 3.4% year over year, right? That's more or less what we saw before the pandemic. And I think that tells you that underlying inflation is sort of where the Fed probably wants it to be. And I know it's still going to take some time for them to get comfortable with the fact that inflation's headed lower, but that's happening. And food away from home is a good gauge, good bellwether, if you may, for overall inflation. Why? Because it brings in workers' wages, restaurant workers' wages, restaurant rents, right? Rents of premises because they have to rent it. And the commodity prices, food prices, obviously, because that goes into restaurant, menu prices, but also transportation prices because you're transporting food across the nation. So all of that tells me, the inflation story, it's all good.
All right. Thanks to Larry and Denise for giving me this shirt about joy and being joyful. I'm joyful that you didn't go on for an hour on inflation. That's good. You did a good job for 2.5 minutes. I mean, the bottom line, though, is this, right? We know we had 9% inflation 2 years ago about this time. We had the big improvements. In the last couple months, we've had a little bit of sticky inflation, higher than expected inflation. I think the market is very comfortable. Look at the reaction. We're keep this simple. Yields are going lower. Expectations for Fed cuts have been increasing. So the market is relieved that we're not seeing massive jumps. And again, why do we see higher inflation? It was things like auto insurance was soaring. Shelter was being stubborn. What's the other one?
It's all these catch-up effects from the pandemic. It's nothing to do with what's actually happening in the economy right now.
Financial service fees, because stocks were higher, so you had to pay more fees to your advisor. I mean, listen, that's not the worst thing if you're making more money with your stock. So some of those things are starting to come back to earth, which all are positive. Why does it matter to everyone listening? It matters because that means yields are coming lower. It means we might see a rate cut or two. We think there's probably going to be a rate cut in September, probably one more in November. Today probably does little to change that. Now, that can change with the data, but all in all, these are positive things. And literally, I mean, who knows when you listen to this video where we'll be, but after the inflation data, the S&P 500 is hitting an all-time high. The Dow's hitting an all-time high. Stocks are at all-time highs, liking what we're seeing on the inflation front. So we've got about a minute to go here. What's your take? When do you think the Fed will cut in September? Where do you lie? Where do you stand on that?
If we continue to see inflation reports like this, maybe even slightly softer, and I think I'm optimistic about that. I think the Fed will cut in September. I think July is too early, but I think they'll cut in September. And that's good for markets, right? I know there's a lot of bears back in town, Ryan, and you sort of push back against them, which is good.
There are. We've seen a lot of the well-known bears. Some of you might have seen the headlines. The same people have been bearish for years in the face of this bull market. This bull market is about 20 months old, since October of 2020. Listen, it takes bulls and bears to make a market go. We've been overweight equities. We've come on these videos for a long time now saying, listen, the economy is on better footing than people think. Earnings are probably coming better than expected, and that should lead to higher stock prices. We're literally hitting all-time highs right now. We had the 5% pullback in April. Listen, after a 5-month win streak, a little indigestion made sense. One final comment, at the end here. You tend to see a summer rally in election years when the president is up for re-election. There's other factors to look at, yes, but we've been on record saying we think that could be happening with the strength we're seeing in May. We might be looking at a nice summer rally here this election year. So with all of that, we're talking inflation. We're seeing some better trends, which is going to help everything. That was your latest Carson's Take 5. See everybody next week. Thank you.